You
Why
so what that say?
I said why the second entry was the normal liquidity sweep, then that's to create an inducement, then sweep liquidity of the inducement again, then most.
Okay. So you're the one that used the diagram to schematics to do your assignments instead of the thing I said about marking it out in the chat. Because
I
okay,
used both.
okay, you did
I
both. Yeah,
sent both.
okay. Yeah, so you guys have explained the assignments, and for everyone else that did not do the assignments, would have to do the assignment to be able to understand further. Well, the assignment is not a must in our class. Well, if you don't do it, you can't join the class. That's what's the difference. So not joining the class means not being able to ask any questions. Okay. So now, mm, so today is Wednesday, right? Today being Wednesday, we have FX currency liquidity concepts. Basically, we're talking about what's facing more on liquidity for FX based pairs. That is GBP, USD, Euro USD, a lot of that. And let's just say GJ. Let's not use GJ. It doesn't belong, guys. I started trying to set up myself in the pair, so I can't use it. So from our last session, this is where we were on GBP USD. So we got to. So let's try and start here. This BTC is getting on my nerves like mad. I'm not supposed to care, but I do. Nah. Okay, so how many of you have already watched the Farming Pips 4 videos? I asked the question. How many of you have gotten to the liquidity aspect of the Farming Pips 4 videos? If you guys are slow to answer, we'll stay in this class 4 hours without anybody learning anything. That's the only issue here. If I can't get no, I can't get yes. So in the comments, somebody said they have a question. Um, so the other three have watched the videos, right? Now, did you understand the video on the liquidity? This liquidity based videos. If no, what didn't you understand? If yes, what did you understand? Uh, let's talk fast. That is really going. And this will be a long video for people that are not in the class. Even for you, self, that want to replay it. To be a long video, if it's that will keep wasting time on the questions. Someone here asked, what is the reversal of the inefficiencies? I just shorter ones respecting the breakout block instead of 50%. What should be done? I don't even get what you asked. Either you unmute yourself or you try and do a drawing on this so I can see what you're talking about. Or you end up doing both. Sef. You want to send an image? Okay. Yeah, send the image to the chat. What if the reversal of the inefficiencies are just shorter? Are just shorter one respecting the breakout block instead of 50%. What should be done? So you're trying to say, what if price just respects the other block, the breakout block, sorry.
Sorry, what I was about to ask was, assuming, okay, this I should have used this one for example, but it went a little bit higher. There are literally some that just breaks the other eye and then come back to
Oh,
respect the
you mean
breaker
like
blocker.
50% retracement of chart?
Yes, instead of retracing 50% back, it does like, let me say 20%.
Okay.
Like there's this image I sent now.
Yeah, I can see the image. I'm looking for it in real chart here. Okay, this is it here.
Yeah.
My
So it
question
just
is,
it
what
wo-
if that's the thing? Yeah. The markup here is 50%. Let's say the markup here. Markup here is 50%. Yeah. Yeah.
okay.
Sales were to have a TP point. But let's be reasonable. The moment price enters here, it becomes an AOI. And an AOI is area of interest. So if you catch an entry, of what reason do you have trying to sell all the way to here because you know it will reach this other, because you know there's another block here? It's not certain that it will reach there. Does that make sense? So let's say, for instance, you're selling. Your sales do not now need to be from that point, right? Let's say, for instance, you're looking for buyers. There's no point here that is confirmed for you here, oh, 50%, or even inside this 50%, there's another zone here, there's another zone here, there's another zone here. They can even also decide to clear the zone that owns that 50%. So what makes here valid more, or what makes here hold is the fact it held, not because you're sure it will hold, but because, okay, this is the area of interest, breaker block. On lower time frame here, they created their own setup for buyers. They did a change of character to the upside here, a minor change of character to the upside here. Then they had their entry and bought. So it's not really a matter of what should you do if it doesn't reach 50%. It's what you shouldn't be doing while trying to get to 50%. Do you get? So basically, if you see a POI or an area of interest, there's no need to further hold that trade beyond that point because I'm sure you have only two options, no matter what you're doing, is buy or sell. So if you're selling to the buy zone or buying to the sell zone, you exit at a good area. A good area would be before the next POI or after the first liquidity, right? Or next liquidity or targeted liquidity that you have. Then um if you're now on the pro trend, like trying to buy a buy zone, right? Like now, this one it has sold, so pro trend is buys. Now you look for entries. Now you're not going to be trying to catch everything, but when the confirmation now comes for the trade, you take your risk and then it goes for you. So I don't know if that helps with your question. All right. Something tells me that this G is going to really annoy me. Not that I can't catch entries, I can, but I mean, for the things that we're supposed to be doing, what we're talking about, what we're talking about, what we're talking about. Even this one looks more stupid. So this is trend breakout. Oh, okay. Now I remember how they handle this particular subject. So there are different types of liquidities, right? And there are different functions for those liquidities. There's the previous day high, there's the previous week high, there's the previous month high, there's hourly range high, there's range high. Sorry, not just highs, highs or lows. So it's vice versa, right? So high or low, anyone, depending on what you're targeting. There's trend line liquidity, there's draw liquidity, right? So let's write out all these things and try and identify them. So we have previous day high, previous week high, previous month high, I'm supposed to put or L. So high or low, or low. So these are the ones according to time frame. Liquidity types according to time frame. Then we have trend line liquidity. We have trend line liquidity. We have field ranges. We have field ranges. We have range liquidity. We have mm, draw on liquidity. These are the major or basic ideas of liquidity I can give you as a function. And then we have liquidity in forms of imbalances, and we have traps. Let's just call it traps. Those are like those inducements or trap. Okay, traps or inducements. Let's put it like so. That's like your engineer liquidity. So let's Coco writes out engineer liquidity. Engineer liquidity, right? So basically, I'm supposed to help you identify them and majorly how I'll trade them, right? What I'll do to trade them. So let's start from the legend previous day high, right? I think this is normally the class that makes me talk about what do you call them? Daily, I wasn't on to say, but it's the last thing I talked about in the last class we had about the daily profiling. All right, that's what I wanted to talk about. This thing is remaining few, this thing, 10 minutes. So let's talk about what we can and then try and post and finish up on the next session that we're going to have now. Like the next link I'm going to send. Hold on. Somebody is supposed to join the class now. Let me send them the link. Now, what are we observing? So what's the previous day high? Does anybody have an answer for that? If you do, please speak quickly. Don't wait for anybody to do it for you. I'm waiting, I'm waiting. Nobody knows how a previous day high works.
Previous literally where the previous day price is closed for the following day. Maybe I want to talk. It's literally the price. It's literally the point where price close for a particular day.
Yep. And how what's the function in this particular topic we have?
Most time price get to sweep liquidity of either previous day high or low.
Exactly. Now, I'm going to teach something real quick. So now, previous day high, right? The function of previous day high is usually just the availability of liquidity from a previous price, where price's previous structure. So let's say, for instance, now we have a POI here. Hmm? Let me change this to my other work. We have a POI here, right? Maybe a 4-hour FVG, daily order block, whatever it might be. And but we know that originally price was coming from a good zone, and maybe this is a retracement into that POI that we have, right? Now we notice something, a bullish close. And a bullish close usually would indicate more bias. But we're suspicious of something. We're suspicious of the fact that we should start to see sales. Now, let's say, for instance, we came and met market this way, a bullish move, POI, sweep of previous day high, and a close. This is an engulfment, right? I've already done our continuation trade here. This would be our idea of our lower time frame trade. So what is going on? So what am I talking about? What am I trying to achieve? Now, there are two different things here to achieve. One, you could have gotten your first entry from this point and traded towards, there are different ways to trade it, right? So you could decide to take your entry from here, maybe the here mitigated first, maybe the morning, however they trade, however they moved, maybe it moved like this first. Okay, went down to previous day low as a continuation buy here, right? Maybe there was an entry here, maybe a minor FVG or another block here, then your exit can be the previous day high. That is the daily high of the previous range because you suspect or expect that after this sweep, we should have a reaction from that particular zone. Maybe the particular zone, maybe it's an FVG that is yet to get to 50%. So it got to 50%, and then now you're now start looking for sales. Now, if you do not get better structural sales in lower time frame, expect to see it at least in the next day. Why? So okay, I think that's exactly what even happened on GU yesterday. Yeah. Let's have one talk again. I'll open GU here and hope that it won't have the reloaded chat. Which one, sure. Okay. So now let's get GU. Now this is me from my own expectation of what is happening, right? Now look at this. Okay, let's check from far. Now, my idea of my POI is here, right? The extreme point of price, right? Now, is this the best POI? I know, but because I noticed how many times we broke one, two structures, we go to this point, and then the rejection is my confirmation. Now, let me explain. What I mean is that there's a high chance I don't expect any sales here. And maybe I just like the way your price raided this zone and started to drop. And I expect that maybe DXY is bearish and can be bearish all the way to even this point. I don't know when I drew this other block, but let's just leave it as this, right? Since we're targeting the recent liquidity of this zone. Now, what is happening? Now, I've already identified that there's a potential resistance there. Now, what do we see here? We saw bullish candlesticks, bullish momentum after this sweep that happened there, and it continued to this point, right? And all of a sudden, we had the next daily candle when it mitigated the zone, it rejected and I reject the comment. Someone's asking for password to this class. I don't know if the class had the password. Maybe do you guys know how he can join without asking me for password? I guess he'll have to wait for the next one so we can finish up quickly. Now, it rejected, and the next set of now it rejected, and this is what it looked like. It closed out somewhere around here, right? Now, my idea for my next trade will be sales, but not just any sales. You don't just look for anywhere to sell. You look for an ideal zone for it to sell. An ideal zone will be where it has available liquidity, however it may form, and it will be something within your premium point, however you want that premium to exist for you. Now, this is the rejection of that daily. What did it take? It took the previous day high. So the previous day month, week high or low. That is the previous day high, the previous week low, previous day high or low, the previous week high or low, the previous month high or low. It's just basically the high or low of the previous day's candle, week candle or month candle. And our function for it is not that it is an everyday something, but it helps us better understand what is going on. So let me put it into another perspective now. So let's say here, it doesn't even always have to be about the previous day high or low, right? Because sometimes you go, okay, see here, you can see this little zone here. The previous day low was grabbed and price continued to take out the previous day high 3 days later and then dropped. But you notice something, it didn't now just drop or take the previous day high, it came into a straight FVG. So how will I put this idea into your head in a very safe manner that doesn't spoil you as a blueprint? Okay, what I'll say now is that it is good for continuations, but it is not good for functions or for structural functions. What do I mean by that? It means that over over time, right, price would always have its function, its way of coming back into a particular zone. And these previous day high or lows are only best for the hourly entries, right? So there are some entries that you'd want to take that are only good on 1 hour, 4 hour, whatever form of fluctuation it might be. And it might just be a previous day high, low to high type of entry for buy, or previous day high to low type of entry for sales. And the original retracement of price must still happen. What does that mean? So if price originally is supposed to get to daily FVGs, it is still approvable for price to come into those zones, irrespective of the fact of your previous day high or low. So if on your hourly you have good structure, you have the normal good structure like this one now, like this, and you now observe that okay, we have a previous day high or low above that your entry that is there, or below that your entry that is there, or maybe you have three entries and one of them is like a previous day high or low. That is one of the other blocks is inside a previous day's range. That is from the top or to bottom of that previous day, right? You can now, and maybe you have three other blocks. You can now start to choose between the other ones that are under the previous day high or low. This class and this session ends in a minute. I want to be sure if I'm getting through to anybody because I don't know if this class, if the next session will be immediately or if they will ask me to wait 10 minutes because they do that sometimes. So please answer quickly so I'll know where we are. Okay. This person said it's fully. Olayinka and Frederick, please quickly respond. And XBT. Okay. Okay. So now the idea now is that you cannot use it to catch, you cannot be doing previously high and low every time. It's boring. You can see that there were plenty previously high and lows being taken and not enough rejections happening. But it always still matter that there were times where it did work and it only helps you continue a trend, but it doesn't make the trend. It helps continue the trend, but then it needs to be supported by the hourly and other factors too. Understandable? So we can get to our next class. Sorry, we can get to our next session because this thing ends in less than a minute. So we can continue from there. So now we're gonna focus on trendline liquidity, field ranges, range liquidity, draw liquidity, and imbalances, traps, inducements, engineer liquidity. All